Today, Bitcoin and Ether head for a positive week. Crypto data firm Chainalysis says the technology's role in terrorism is overstated. And the SEC seeks dismissal of its lawsuit against Ripple's Brad Garlinghouse and Chris Larsen. We talked to Ripple's chief legal officer. Welcome to CNBC's Crypto World. I'm Tanea McKeel. Cryptocurrency is getting a boost as we head into the weekend. Bitcoin briefly topped $30,000 for the second time this week, driven largely by optimism about a Bitcoin ETF and a flight to safety as investors weigh the fiscal position in the U.S. and uncertainty about the U.S. banking system, as well as issues abroad, like the war between Israel and Hamas. The move in Bitcoin began Thursday night as the 10-year Treasury yield touched 5% for the first time since 2007. Historically, high rates have pressured Bitcoin, and they may still hold it back from reaching new highs unless we get easing policy from the Fed. Meantime, rates pressuring the stock market, with crypto moving in opposition. Bitcoin capped the week with a 10% gain, ending above $29,000 for its best week since June. Ether climbed above $1,600 to notch a 4% weekly gain. And in the meantime, Ripple's XRP token hitting 52 cents, jumping after the SEC moved to dismiss its case against the payments company. More on that in a bit. Let's talk about the top stories. Data firm Chainalysis is out with a new post saying crypto's role in terrorist financing is overstated. We've told you this week about the growing attention world leaders are placing on crypto in the wake of the war between Israel and Hamas. We saw lawmakers on Capitol Hill send a letter to the Biden administration asking it to look into terrorist financing in crypto, and the Treasury Department placing new sanctions on individuals and financial organizations linked to Hamas who use virtual currencies. Well, Chainalysis says that funds flowing through service providers affiliated with terror financing may look bigger than they are, that the majority of those funds may actually be unrelated. The problem is when someone sends crypto through a service provider, it gets mixed with other funds to other users. To solve this, Chainalysis says KYC and AML have to be of the utmost importance for service providers. Next, the SEC asked a judge to dismiss its lawsuit against Ripple execs Brad Garlinghouse and Chris Larsen. The agency told the judge on Thursday that it's dropping its claims that Garlinghouse, the CEO, and Larsen, a co-founder, aided and abetted sales of the crypto token XRP. This started back in December 2020, when the SEC accused Ripple of raising more than $1 billion with the sale of XRP. Of course, those claims were put in question after a judge ruled in July that the sale of XRP on public crypto exchanges didn't constitute the sale of securities, but that the sale of XRP to hedge funds and other institutional buyers did violate the law. This dismissal comes as the SEC has faced multiple setbacks over its attempts to regulate the cryptocurrency industry through the federal courts. Well, for our main story, I spoke with Stu Alderoty, the chief legal officer at Ripple, about the dismissal and the current state of regulation in the U.S. All right, Stu, thank you so much for joining us today. This dismissal is the latest win for Ripple and its executives following that partial victory that we were all so excited about back in July over the sale of XRP. What does this latest move from the SEC mean for the company, for XRP, and for your executives?
Yeah, so this is a capitulation by the SEC that I think that they really didn't have any case here. It's our third victory in a row. In July, a federal court ruled that the digital asset XRP is not in and of itself a security. The SEC claimed it was. In October, the SEC tried to take an immediate appeal of that decision. The judge said, no, you can't take an immediate appeal. And let me remind you of all of the reasons why you were wrong in the first place. And then in the face of that, they capitulated, they surrendered. They really decided to dismiss what was left of the case. I think that is unprecedented that the SEC would do that, but I also think it's revealing that they have finally acknowledged that they really don't have a case here. And more importantly, for the industry, they've been trying to seize jurisdiction over the crypto economy through something called regulation by enforcement. And I think this is the first time that they've had a company and executives with the resources to fight back. And I think they were surprised by that. And when put through the litmus tests of the judicial process, it's really shown that they don't have a case. So there's a bigger issue here. There's a bigger policy issue here in terms of what is this country going to do in terms of getting rational regulation for the crypto economy. And then separately for an agency like the SEC that really is a bit out of control. It's really the administrative stake on awfully bad keeping their eye on the ball, right? They come after a good company like Ripple, entrepreneurs like our executives who have built this company up over the past 11 years. And while they're doing that, they're keeping the eye off the ball of FTX, Sam Bankman-Fried, all of these companies that are going bankrupt. So consumers are really getting harmed through this wrong-minded approach from the SEC when it comes to crypto in the United States.
Does this latest development change how you think about regulation in the U.S.? It doesn't provide any more clarity, but it is yet another potential blow to the idea that the SEC has a clear mandate to regulate crypto. So, I mean, does this make things murkier?
Yeah, I think for Ripple and the digital asset XRP that we use in our tech stack for the products that serve our customers, cross-border payments, this provides absolute clarity that Ripple's use and distribution of XRP does not constitute a security, and therefore the SEC has no jurisdiction over our company, and they have no jurisdiction over the digital asset XRP. So that's a great thing for Ripple, and it's a great thing for our products and our services. I think more broadly speaking, we still need a clear regulatory framework in the U.S. when it comes to crypto. Ripple's a global company. We operate in Singapore, in the UK, in the EU, in Dubai, in Brazil, and through a joint venture in Japan and Australia. All of those places we work in cooperation with and under the supervision of regulators, clear licensing authorities. We don't have that in the US. So even in the face of this victory, which is very, very important for Ripple, and I think puts us in a unique position, the jobs, the tax dollars, the entrepreneurship, it's all being moved offshore. And I think that's ultimately a tragedy for the US.
Back in July, your CEO, Brad Garlinghouse, threatened that Ripple would leave the US if it lost the case against the SEC. You didn't lose the case, but where does Ripple stand now in terms of investment here in the US? Are you still looking abroad for that regulatory clarity and opportunity?
So I'm sitting here in San Francisco where we have one of our major offices, and the company was founded in San Francisco. That being said, why we've been fighting the SEC over the past 3 years, we have built the company mostly outside of the U.S. The company has never been in a stronger position, both in terms of number of customers, products, revenue, cash on the balance sheet. But all of that has been built outside of the U.S. in the jurisdictions that I mentioned earlier. That is because of the regulatory hostility that we have in the U.S. So again, as I talked about earlier, while we won, while we are in a unique position because of that win, there's still an undercurrent of hostility from our government when it comes to crypto entrepreneurship and the crypto economy. And I think until that is resolved, it's very difficult and challenging for any company to really build robustly in the U.S. So we haven't abandoned the U.S. We still have employees in the U.S. But over the past year, and certainly over the past quarter, well more than 50% of our hiring and investment has been outside of the U.S.
Well, I also want to ask about Mika in Europe. We heard from Coinbase earlier this week that it's setting up shop in Ireland to prepare for the rollout of Mika. What are your plans there?
So we also established an office in Ireland last year. We have applications pending with the Central Bank of Ireland, both for a virtual asset service provider license and an e-money license. We'll work with the regulator and hopefully satisfy them that we are equipped from a regulatory and a compliance standpoint to operate under their supervision. And hopefully once we get that license, we'll be able to use that not only to operate in Ireland, but to passport that through the EU. We're doing the same in the UK. A few weeks ago, we received our major payments institution license from the Monetary Authority of Singapore. We're hopeful we'll get clearance in Dubai before the end of the year. We have an agreement with the Central Bank of Brazil to do business there. We operate under a regulatory supervision through a joint venture in Japan. So this is the direction of travel for the industry.
Okay, that's all for Crypto World this week. We'll be back again on Monday, and we'll see you then.